Good evening. This is Ken Long. It's the night of 29 July 2009. I'm going to do a quick look at my top level daily report to see what's going on for tomorrow. Starting in the upper left-hand corner, I see that we're in bull quiet mode, and that's very favorable for the long side. So any market strength I want to reinforce and go long. Annual trading range or at an index value of 59, so we're slightly above the midpoint of the prices from the last 12 months. 10 days, we're at the 91 index level, meaning that we are overbought on a short-term basis. Now you can see here this is a graphic representation of that Williams percent R. We've been overbought for the last 10 days, and so when the market's making bullish moves, it can stay overbought for a long time. On the gap stat, what we're looking at here, the one I really care about is the standard deviation of the gap of SPY of the market. That's the overnight volatility at 1.5. It's still twice as high as it was a year ago, but it's only 1/3 of what it was as little as 5 months ago. So the overnight volatility is coming down. I'm looking at the 10-day max pains for some easy candidates. I'm already interested in Microsoft, and I'm always interested in McDonald's. And let's see what else if I see anything else. Well, I see that IFN is India, USO is oil, OIH is oil service, EZA is South Africa. So I'm going to be looking at the oil complex tomorrow. When that's oversold, in other words, when it's max pain, there's an opportunity on a swing basis to start adding to that position. So I'll note to myself that DXO, the double leveraged oil ETF is a good one. There's no signals in the overreaction or the channeling system. I have my pivot points available for tomorrow when I'm watching SPY to see when it's going to get to likely turning points. Inside these indicators here, I see that we are at an extreme bullish reading on the price relative to the 200-day moving average and the slope of the 50-day moving average. Volatility index at 0 it's as quiet as it has ever been in the last 100 days. So that's significant. Decrease in volatility has led to an increase of price return. So they're inversely correlated. That's important. This indicator, the slope of the 30-day regression line, it crossed over its 10-day moving average about a week ago, which is a very favorable sign. It's already made a 1 standard deviation move north, and that's corresponding to the gains of about the last week. You can see here that the volatility, the daily volatility of SPY has come down from as high as 4.5% all the way down here to about 1.5%. So it's an extraordinary reduction in volatility as measured by the ATR percentage of the last 14 days. This is a quick look at market ADX. It was as low as about 18 and has been climbing, and with the plus DI greater than the minus DI, that is a very favorable market. With an ADX of 25, it is solidly in the bullish intermediate trend. It still has some room to go. This little histogram just shows the visually the difference between the green line and the red line over the last 20 days. I find that a little bit easier to read. Quick look, you can see this extraordinary move of the last 2 weeks. What I'm looking at for tomorrow then is a possible stealth move in USO, possibly DXO, which is the oversold oil sector. Some of the usual suspects that are stealthily available for tomorrow: Caterpillar, Home Depot, Merck, Verizon, Alcoa. I would add Microsoft to that too as well. So that's a quick look at what we got going on tomorrow. If I see strength in the market, I'm ready to get back on board, and starting with the techs, and then I'm going to look for the oil to see if it starts making a reversal after its sell-off. So thanks for your attention.